Lidar company Luminar, in its quest to make the uncrashable car, as Austin Russell, the CEO, put it on the company's conference call, has a new deal with Volvo. I want to bring Austin in now. And Austin, you reported earnings last week, but you also talked about this Volvo safety standardization. And I think that most of us, since we learned about LiDAR, which is a relatively new development, have thought about it in terms of applications for driverless cars, right? But this shows that there are definitely other applications as well. So first of all, just set the scene for me. What exactly is your product doing in these Volvo cars? What function is it providing?
Right. So I think there's two key modes of functionality here. So one is when it comes to autonomous driving. So it allows you to take the driver out of the loop for highway use cases. So in other words, it can enable autonomy on highways, exit to exit. And then the other side of it is that it has the ability to dramatically improve the safety of the vehicle when the human is driving on surface streets or frankly anywhere. So part of the rationale, though, with the standardization is that this LiDAR system, as well as the software that we have, is now starting to go from something that can be an option on higher end vehicles to now starting to be standardized on automakers. This is something where safety shouldn't be optional, particularly when you're talking about such a fundamental shift in what this can do for drivers and preventing accidents, just like seatbelts or airbags decades ago when they were first introduced. So that's part of the significance. It's certainly by far the biggest deal that we've been aware of when it comes to the broader auto tech or autonomous specific industry, when it comes to seeing this technology actually see the light of day on real production vehicles and not just get stuck in test mode.
Austin, you sure seem to be gaining a lot more commercial contracts quicker than a lot of folks on the street anticipated. How much backlog do you have in terms of order value?
Yeah, so we've been this has been pretty rapidly increasing. Just for this quarter, we actually increased guidance on a few different key metrics, including our major commercial win target for this year. We doubled it from 3 to 6, which has really just been taking the market by storm in that respect. And with that, that's where from an order book perspective, we previously disclosed at the beginning of this year that is an estimated 1.3 billion forward-looking order book. Again, this is only being counted from programs that we've won here or been awarded to us as part of an estimated accumulation of the business and the business opportunity in terms of what's ahead for the programs. But the thing is that we actually are now raising that significantly. We're expecting at least 60% growth in that for this year. So it'll be a great one ahead of us by all means, and starting to see that solidified, even greater conviction in everything that we're seeing ahead of us, and raising guidance as well on near-term revenue, which is only accelerated from these series production program wins and people that are already paying us up front, even before the production starts of their vehicles.
And Austin, one partner caught my attention when you guys reported, most notably because it's not an automaker. What are you doing with Airbus right now?
So with Airbus, I mean, the goal was really to take from the ground to the skies, with them too, as part of the aviation industry, and work with some of the leading key players in other adjacent markets that this is applicable to. Our focus is work with a handful of really high quality players to be able to introduce the technology for different applications and markets. Of course, the main focus really has and will be for any foreseeable future the core automotive market, and that's the multi-trillion-dollar opportunity that that we're going after with an addressable market for us that's well over 100 billion and ultimately going into hundreds of billions. But when it comes down to it, I think there's definitely some great other opportunities that are out there, and to be able to see folks like Airbus, go in and really pick our technology to be able to enable the future of flying for what they're doing with Up Next. It's great to see opportunities like that.
And Austin, it's Miles here. You guys have been public now for almost about a year, if my math is right. And I'm just curious how you've thought about the business differently as you start to get into this cadence of the quarterly update and thinking about both the technology developments, but then certainly as our conversation here is focused in your release, highlighted as well, some of those commercial and cash flow type updates that I think the street is certainly going to be focused on a regular cadence.
Yep, yep. Totally, and that's where I think particularly for a company like this, you really have to be able to summarize how do investors judge the progress of the business? How do you see that evolving over time? Because as great as quarterly numbers are and everything for kind of the near term financials, they're not super meaningful in terms of the long term context, and that's why people are really focusing about the technology, about the products, but more than anything, also the commercial wins in terms of how that manifests itself. In this case, these are true series production wins. These aren't, just for testing and development, for these key wins that are first of their kind that we've been talking about. And that's part of the significance in terms of what we have ahead of ourselves for all of this. So we outlined 5 key milestones that we have to basically be able to deliver on everything from Iris, our Lidar, basically industrialization and series production of the product that we have, and we've successfully delivered on that, to our software, successfully delivering on those milestones. Commercial win targets, again, something that we just raised guidance on, to order book as well, for example, of something that we've also just raised the guidance on. So, that's where you really have to have metrics to be able to track that progress and be able to have something that's also reasonable to the market that makes sense to be able to show things for. So, again, it's been really our best quarter yet, by all means, in terms of what we've been able to pull off and what we've been able to raise here as well. So looking forward to continuing to also be in the mode of we want to be in the camp of under promising and over delivering, particularly in a world of companies that are over promising and under delivering in some similar segments of the space.
And Austin, you're just you're winning these contracts, I think, a lot faster than many folks on the street expected. Do you need to raise more cash to service this better than expected demand?
Nope. We're all in, and by the way, we're noted for the guidance that we were raising. It was the full year guidance that we have for revenue that we have in the near term here. And then when it comes down to it, from a capital standpoint, we raised the capital that we needed to be able to see this through the whole initial phase. Now, that's not to say that we won't ever raise capital, in the sometime in the future if we see specific opportunities that we want to be able to make additional investments in. But for the core business plan, that's not required at this stage. In fact, we actually did set an additional metric as it relates to cash spend, and we're actually expecting to end this year with more cash than we started with.
That's a good metric to have, Austin. It's good to see you. Austin Russell is the founder and CEO of Luminar. Good to catch up with you. We'll talk to you again soon, Austin. Be well.
Absolutely. Thanks. Great. Thanks for having me.